Hello and welcome to the Weekend Investing Daily Bytes. We're shooting episode on 11th of April 2023, and the markets continued the rally up, extremely robust leg, which initially looked like a dead cat bounce, now morphing into more meaningful move up. We've recovered almost all that we had lost from the first week of March. Somewhere around here, we had lost from 17,800 down to 16,800, about 1,000 points, and we are very close to recovering that entire thing. I suspect that given this nature of this rapid rally, we may encounter some resistance here at 17,800, but my guess is that we are heading towards 18,000 plus in weeks to come. So this is very, very heartening to see that the market has brushed off some of the weakness earlier in March, especially from December 22 onwards. And this is a great recovery month that is happening. Of course, we've had several recoveries in the last 1.5 years, which have resulted in at least keeping the markets at a reasonably sane level and not allowing the markets to really drop down into the abyss. So from that perspective, we are less than 10% away from the all-time high. Very, very good position to be at in terms of Nifty. Of course, there are stocks which are much, much further away, and hence this entire thesis that you should not be holding stocks in deep pain, only hold stocks which remain relatively strong versus others in the market, because those are the ones that are likely to do well whenever the market turns. So that is the whole concept of momentum investing, is to retain stocks that are telling you that they are willing to go up further. In terms of the internals of the Nifty today, you can see very nice gains all across the board. Kotak Bank has exceptional gains at 4.9%. State Bank handsome 1.1% up. ICICI Bank 1.5% up. So large banking leads. Then in the FMCG space, you have ITC up nearly 2%. Levers, Nestle, Britannia also up. In the energy space, you have ONGC, Coal India, BPCL, Reliance all up. In the auto space, you have Bajaj Auto, Eicher Motors, Mahindra, Maruti all up. Tata Motors taking some rest today. But the focus today was on steel. So Tata Steel up 2.5%, JSW Steel up 3.6%. Hindalco also up 1.48%, and overall a reasonably good day. The only sore element in today's market was the IT stocks, where TCS losing 1.5% and Infosys losing 1.5% also, along with HCL Tech. So this is a spot where some weakness is there, but other than that, the markets look quite good. Sectoral overview is telling us the same picture. Metals up 1.8% for the day, 3.5% for the week. PSU banking is making a comeback. There is a lot of talk on the street about fantastic results expected from PSU banks, 1.6% up today. Private banks were also up. Commodity stocks, energy stocks, autos, FMCG, public sector enterprise, and consumption stocks were also doing well. Nifty up 0.6% for the day. Real estate taking a breather, although for the week, real estate has been the top performer at plus 7.5%. IT stocks, as I mentioned, down 1.3%. So overall, very good week, and almost I would say a very good month. Also, the past month has been a good recovery month for almost all sectors except PSU Bank and IT. Mid-cap stocks, which were a bit slower than Bank Nifty and Nifty, have also caught up now, and now at this resistance level, having crossed the 200 DMA. Incidentally, on the Nifty also, 3 days back, we crossed the 200 DMA. And although, I mean, there is no rocket science behind 200 DMA, but, it's just one more filter that, if you're above 200 DMA, there is more probability that the uptrend is or can resume. Small caps a bit slower than Nifty and mid caps, but again, just about at that trend line resistance, slightly below the 200 DMA, a great recovery from where we were near 8,500. So, good recovery from small cap, but of course, small caps are still far away from about 15% away from where they were at the peak. Nifty Bank, as I mentioned in last few sessions also, is the front runner. It has broken out of this trend line. It is way above its 200 DMA. The 200 DMA has been trending up since September. If you see it on Nifty, it has started trending up only from November onwards. But Bank Nifty has been sort of uptrending since a longer period since September, and that seems to be continuing. I think above these resistances of 41,500, 4,200, we may see a good run up towards an all-time high. We are less than 8% from an all-time high. Bank Nifty doing quite well. Today's focus for me was Tata Steel. You can see that Tata Steel, after correcting in the last couple of months, uh, came back to its 200 DMA. It jiggled around the 200 DMA for a while, and today, with good volumes, it has created a situation where it does look like a good setup with potential of 109, 114. Also, potentially, I think it can go clip this gap here. The downtrend seems to be getting over. Some trade can be taken here, or at least it will be put on the watch list, and maybe stops below the 200 DMA can be put. So metals look like they are turning around, not just Tata Steel, also GSW Steel and other stocks. So it does paint a very good picture for the sector going forward. So overall, are we at the cusp of an uptrend? That is the sort of question that we have. Of course, nobody will have a clear-cut answer. But if you look back in history, uh, we have very strong correlation to the US dollar index. Whenever the US dollar index is falling, emerging markets and gold, etc., they take off in a big way. And in the last 20 years, this chart will show you that as and when you had the US dollar index falling, you had some great runs in the Nifty. And the same thing is happening now from 114, 115 levels. US dollar index has been falling. I'll show you some more charts on this. And it does seem like the Nifty is taking off into a new territory based on this. And so has gold INR. I mean, incidentally, I mean, gold, which is bashed so much by equity folks, has given about 16 to 18% CAGR in the last 5 years, and of course over the last 20 years, more than 12% CAGR. So something to think about and keep in your portfolio as a hedge to equity. Very, very important in today's uncertain times. We really don't know at what point of time what kind of uncertainty can come around, especially for equities. Uh, if we go deeper into this picture, I think this is the same chart. Yeah, so this is the US dollar index, and you can see here that while it is making a slightly a bounce from this neckline, it has also made a flag, and it is about to come below that flag. So very, very uh, you know pertinent point of reversal here. If this does convincingly break down below 101, I think we are in for at least 6 months, or a significant period of a run on the Indian markets and in precious metals. So basically, risk on trade will get on, and you can see that a very clear cut head and shoulders pattern is also forming with the right shoulder coming into place. So the weight is if we will break down from here or not. The dollar index is very well below its 200 day moving average also, and also you can see that every attempt here for the, and this is on a more granular basis, on an hourly basis, you can see that every attempt to take the dollar index up is getting met with some very sharp, down moves, and that is kind of indicative that the dollar index is weak, and there is higher probability, I would say, for the dollar index to go below 101 at this stage rather than cross 106. If 106 gets crossed, then all bets are off the table. We can look for much lower equity levels, much lower gold prices. If this 200 DMA and 106 level gets taken off, I mean, I think then of course all bets are off. But I am extremely hopeful that that situation may not arise, and the dollar will eventually break down here, and that will be very very good for the Indian market. This is all I had for today's episode. Thank you so much for watching. Let me quickly go see if I have any questions that I can answer here. So let's look at some charts and some questions if there are any. Ms. Shafali Mehta says, at this point of time, does real value exist or just a relative value case? So I think it's a very good question. I always believe that everything is relative and there is really nothing absolute in the world, because the monetary base itself is like shifting sand. So when the monetary base is moving, no value can really be ascertained to any asset, because the whole basis is changing, so that the change of that basis itself tells you that only relative pricing can work. And with abundant capital flowing all over the world, that money has to go seek some resting ground. And once that money goes seek some resting ground, and abundant of that is available, obviously there will be no limit to what any real asset can be priced at. And if in terms of stock prices, I mean, you could see it in price earnings ratio. What used to be a 20 PE used to be a high PE, and one was looking at 10 to 15 PEs to enter. For many people, those kind of PEs have not come in the last 8 years, and that is simply because those models don't work anymore. It is all about relative valuations. So a stock is relatively higher valued than the other, but maybe on the absolute basis, it has really no meaning. So I hope I have been able to answer a very good question. Next question I have is, which any sector which will outperform growth of GDP very strongly? Nitara Singh is asking this question. So I think, in my sort of biased view, I think the banking and finance sector will outperform the GDP if India has to do well. And that has been my sort of experience also, that every time GDP has either gone up dramatically or come down, the banking and finance sector has led that rally or that drop. So for me, these sectors are extremely important and they tend to outperform the GDP, the growth of GDP. Madhav says, can we opt SIP in current market status? Yes, you should definitely SIP in this current market. This market is basically allowing time to users, to investors, to gradually build their position, because whenever that upswing comes, it will not come with any prior warning. And who knows, I mean, this uptrend that we have seen in the last 10 days, this may be the beginning of a huge bull rally, which a year later we may say, oh, we did not realize that we were starting this out in March 23. So this always happens, at least with me. I've seen the markets now for almost 28 years. One is never able to guess, how far the market can go in any direction, and hence there's no point of guessing it. So always, I always say the best time to invest was yesterday, but if you're starting to sip now, today is good as well. Rashmi Singh says, what are the major risks and opportunities facing investors in the current market and how can they navigate these effectively? So, there's a lot of opportunity in the market. Depends upon what kind of investor you are. If you are looking for stock picks, you can, bottom fish. A lot of stocks are available at great values, but you need to have that lens of a value investor for that. If you're a momentum investor, you could look at a lot of stocks that are doing well in terms of momentum, and that can be a great way of picking stocks. I mean, we've shown over the last 7 years how momentum investing has done extremely well versus any other format of investing. And there is 200 years of research that is available, which tells us that momentum investing continues to beat all other formats of investing. So these are some of the things that you could do. Again, it all depends upon the personality of the investor, whether they are kind of risk, what kind of risk seekers they are, or are they are willing to work more in a systematic manner and follow a system, or a more ad hoc investing basis. A lot depends upon the person to person. Ria says, really very helpful insights we are getting through you. So thank you so much for your appreciation. Thank you to all the viewers who have put in the questions. I hope I've covered most of it. I'm running out of time, so I'll take more in the next one. But thank you so much for watching. Bye.